Well, hi guys, welcome to this Moneycontrol live stream. First of all, just want to apologize to our viewers for this late start. Some technical issues, which kind of happens when it comes to the digital setup. So apologies for that. But if you look at the markets, they are in fine fettle. Although we've given up some of the opening gains. Triple-digit move. Just a minute ago it was up somewhere around 60 points, and now we are seeing a 100-point bump up on the Nifty. So it's fairly volatile today as well. But yesterday we managed to recoup half the election day losses, and we ended with strong gains of triple digits on the Nifty. In fact, on the Nifty 50 yesterday there were no losers by the end of the day yesterday. But today, of course, 22,750, we are trading around those levels. The mid-cap index is also in fine fettle, 2% uptick there. The Nifty Bank index above that 49,400 mark. And if you look at the sectoral movers, let's see what some of these sectors like metals and realty are doing. Metal pack, yesterday it was up somewhere around 6% or thereabouts. Today, extending those gains, 1% up for the Nifty metal pack. It's the FMCG pack that's witnessing some bit of profit taking after 2 straight days of strong gains, mind you, because on election day when all of the sectors were bleeding in the red, it was FMCG pack that was the lone survivor and ended higher by about 0.5% on a day when the sensex shed somewhere around 6,000 points or thereabouts. But today, some bit of profit taking coming in. So the Nifty FMCG pack is down somewhere around 1% or thereabouts. The Nifty Pharma pack also under pressure. So some of these defensive names are witnessing profit booking. Energy pack is upbeat, 2% up. Aside of that, PSU banking pack is among the top sectoral movers today, 3% uptick on the Nifty PSU banking pack. But let's not delay our guest any further. Joining me now is Chandan Taparia of Motilal, Oswal. Great to have you on the show, Chandan. The kind of up move that we saw yesterday, do you think it has the legs to sustain? Today it is volatile, right? Right now we are somewhere around 70 points up. So it is oscillating in a range of 50 to 60 points or thereabouts. Do you think we can sustain above the 22,700 mark by the end of the session? Or what are the charts telling you?
Good morning. Thanks for having me. I want to highlight a couple of points before I just give the precise level. The good part is that the India VIX, which corrected sharply from higher levels in last 2 trading sessions, 3 days back the volatility was at 31.71, and now the volatility index is at below 16 or 17 marks. So we have seen a drastic decline in the volatility index, which indicates some sort of stability will be back in the market. Now looking at the Nifty index, we have seen a wider swing of more than 2,000 points. As 4 days back it made high at 23,338, then corrected to 21,281, and we almost recovered by more than 1,500 points from lower levels. So correction of 2,000 and recovery of 1,500, and now somehow stability could be there. I cannot say whether it will hold about 22,700, but I can say that it is likely to hold 22,500 zone. So buy on decline could continue. We believe with support of 22,500, we can attempt for an upside swing to us 22,850 to 23,000 in the Nifty index.
All right, hold that thought, Chandan. We'll come back and talk about specific stocks as well. But let me also bring on board Andrew Holland, who's the CEO of Avendus Capital Public Markets Alternate Strategies. Andrew, always a pleasure chatting with you. Over the last 3 sessions, we've seen massive moves coming in on the key indices, right? In fact, the markets were not prepared for the kind of outcome we saw in the elections as well. But do you think all the worst case scenarios have already been factored in, given the kind of fall that we saw, or the magnitude of fall that we saw on election day, and thereafter we've seen a very good recovery as well, right? So would you say that the worst case scenarios have been factored in, or would you say that a fair bit of volatility can be expected until some clarity emerges about the budget?
Yeah, I think the market's now kind of taken all the different cues and concerns and said, okay, it's not that bad. And it's a Modi-led coalition government, and therefore no real change from that initial. I think really what caught the market out, to be honest, Nandita, is that the exit polls were so strongly in favour. I think that was the shock. And once the dust settled and you had time to think about it, then what is really changing now. I know a lot of there's a lot of noise out there about, populist measures and so forth and so on. I'm thinking that, there will be some increase towards measures to help the kickstart the rural economy. But we have to remember that the government does have that RBI dividend, so it had that flexibility anyway. But the market hit everybody or tarred everyone with the same brush in terms of capital expenditure stocks, or in terms of the capex kind of cycle slowing. The government has to spend, and we've always said that defence is a global factor that's going to. Everyone's spending money on defence and in renewable energy and power. And in India, we have all these shortages, so you can't just. It's not just going to stop. So I think the market's coming to terms with that and saying, okay, we're back to where we were on Friday. What's up now? And before the budget, will we start to see business as usual?
Right, business as usual. So, would it be too early to shun PSU stocks? Because today, all of the Nifty gainers, or most of the Nifty gainers, are from the PSU pack. Of course, we saw knee-jerk reaction from some of the stocks on election day, with the likes of PFC, REC, shedding somewhere around 25% or thereabouts. So, would you say that the price correction that we saw on Tuesday actually came as an opportunity in disguise? And perhaps, given the fact that some of these companies, according to experts, have very strong businesses, would you say that now, there would be a good entry point after the kind of correction that we saw on Tuesday?
Yeah, I mean, for a lot of these stocks, let's just take the PSU stocks as a whole, Nandita. I mean, maybe there are some excesses there in terms of share prices or valuations for some of them. But, fundamentally nothing changed. So, yes, you're right. I think, the excesses in terms of share prices got taken out. And now it's more reasonable levels where I think you can start looking again quite heavily into investing, because all of these sectors I mentioned are going to see the government spending. That's not going to stop. They might divert some extra money from the RBI dividend towards the consumption side of the equation, but the spending on the infrastructure is I think we're going to see a whole slew of orders coming over the next 3 months.
So, would consumption be a good pocket to look at right now, given the kind of noise that's around, higher rural spending or higher populist or more populist measures being taken now that we have a coalition or we would have a coalition government? Is it time for a big portfolio reset? And if yes, should consumption be a must-have now?
I think consumption should always been part of your portfolio. And when we spoke before, Nandita, I said I'd rather go for that kind of premiumization play, which played itself out more to beverages than it did to kind of pure kind of FMCG type of products. Now, yes, the rural economy might start to pick up, but I don't see. It's not as though any of these companies, earnings are going to kind of go up by 30-40%. It's going to be a slow grind. If I'm going to be more defensive in my portfolio, I'd probably shift more towards IT, because we saw Canada reduce interest rates yesterday. ECB will likely reduce interest rates today. So your interest rate environment starting to kind of come down, which is great for IT stocks. So if you want defensive plus growth within that kind of defensive portfolio, then IT I think has a better leg up on valuation than FMCG, apart from those companies in the kind of drink sector.
Right, very quickly, a couple of more questions. I want your thoughts on an HDFC Bank, because I was just reading a note by UBS in the morning, and most of these brokerages expect HDFC Bank's MSCI India weight to go up in the August rebalancing, right? There has been consistent selling by foreign investors, which is why there is higher, or the headroom has gone up. In fact, some of the brokerages are expecting a doubling of weight on the MSCI index for HDFC Bank as early as August. Do you think there's a possibility of that? And if yes, I know you don't talk stock specific, but if yes, HDFC Bank makes a good bet at the current juncture after the kind of correction that it has seen?
I think the private banks in general, probably been overlooked, unloved as much as say FMCG over the past 6 to 9 months. So I think the next leg of the banking move higher will be the private banks. And if the UBS report is correct, that, there will be an MSCI rejig. It's a huge amount of money that would come into HDFC Bank. So obviously, there's, with that kind of inflows, the banking sector would probably be led by this one stock because of those types of inflows into the bank.
Right. Lastly, Andrew, I want to get in your thoughts on what are those sectors that are, evergreen themes, that are largely unaffected by the election outcome. Anything that you should have in your portfolio right now that would safeguard you from, all the latest developments around elections and government formation and the likes?
So, Nandita, I'm sure you're still going to travel and go on holiday this year. So there's one sector which is not going to be affected. We're going to still travel. We're going to still use airlines and hotels for our kind of experiences. So that's one sector. We're going to continue to drink and consume, alcohol and non-alcoholic beverages. And the electronic manufacturing sector, whatever you say, this is a huge opportunity for local and foreign companies. So these are the themes that are just going to be unaffected by what the political situation is at the moment.
All right, of course, yeah, I look forward to a lot of travel, and I'm sure even you do. But with that, I think, that's all about the time that we have for this interaction today, Andrew. But it's always a pleasure interacting with you, and I look forward to longer conversations with you, once the dust around elections settle down.
Thank you, Nandita, for the opportunity, as always.
Thank you. Chandan is waiting by. Chandan, I want to get in your thoughts on an HDFC Bank. I was just talking to Andrew about it. But on the charts, so what are the kind of levels you'll be watching out for here on the upside? I think 1500 levels have been crossed on this stock pretty decisively. Right now, it's trading at somewhere around 1550. Flat with the negative bias, but what is the kind of level that you'll be watching out for on the upside on this counter now over the next couple of weeks?
Yeah, so the market witnessed tremendous recovery on the last day, and now follow-up is clearly visible. That is somehow promising and indicates that bulls are back on track after the volatile swings of last 2 days. So I believe that most of the banking could be in positive flavor, whether you talk about the Axis Bank or ICICI Bank, HDFC Bank. However, we witnessed some softness or consolidative move. But I believe 1520 could act as a support, and this time your HDFC Bank can head towards 1600 to 1620. 1600 to 1620.
All right, 1600 to 1620, that's the level to watch out for on HDFC Bank. But what about the BHEL? The stock is up 10%. There is news flow. It has won orders to the tune of 7,000 crore rupees from two Adani arms. Most of these PSU banks were badgered and hammered out of shape, but today good traction in the likes of NTPC, SBI, ONGC, and now BHEL that I spoke about. So how is BHEL looking with a trading perspective, and anything that's looking good on the charts among all these names that I mentioned: NTPC, Coal India, ONGC, and SBI. SBI, especially after the 15% correction on Tuesday, good entry point?
Yeah, so we have noticed the good recovery in all these PSU name, capital goods name after the profit booking of last 2 days. So first, let me talk about the BHEL. However, this stock has hit the 20% hit. So momentum could continue. I believe with support of 272, we can expect a run up towards 295. When I talk about NTPC, yes, a decent recovery is clearly visible. With support of 350, it can head towards 370 levels. Even if you look at other name like GAIL, Gas Authority, 202 is the support, it can head towards 222. So most of these stocks are witnessing decent buying, and I believe this momentum could drive the next rally of 5 to 7%. And the best part is these stocks have seen some profit booking from higher levels. So margin of safety and bargain buy is also supporting the price sentiment.
All right. That's the view then. But what about RVNL? That stock is also witnessing a good up move today, 7% up on the back of order wins to the tune of 515 crore rupees. Is there an opportunity in some of these railway stocks still, likes of IRCTC, RVNL?
Yeah, so railway are also witnessing decent recovery from the lower levels, and RVNL is a counter which we like for long-term point of view. It witnessed a decline to 312 and witnessed a recovery till 380. So again, positive price placement is clearly visible. Volatile swings are there, so your stop loss has to be slightly away. 355 is the support. This time it can head towards 410.
All right, we have some of these counters that were, witnessing very good traction yesterday. The likes of Hero Moto, HUL among the top Nifty losers today. After the kind of up move that we've seen, would you say that this dip that we are witnessing today could be a good time to get into these for the next couple of weeks at least?
Yeah, you can do that. In fact, most of these stocks have seen a good run up, and the good part is, especially when market was not holding, these stocks have seen the good momentum. So positive on most of auto name. Nifty Auto itself is heading towards the new lifetime high. Bajaj Auto one can buy with support of 9200. This time it can rally towards 10,000. Even Hero Moto, this decline could be bought towards lower zone. 5200 is the support for next leg of rally. So most of these auto names are holding the strength, and I believe these provides margin of safety with momentum as well.
All right. What would you do with the Z? The stock is up 4%. It has a board meet scheduled today where it will consider fundraise via share sale. Would you trade into this counter? Because in the last 1 month, the stock has seen a good double-digit move, 12%.
So it's very tough to trade this counter because it turns, you're talking about Z or VI?
Z.
Okay,
Z. Yeah.
Perfect. So we have seen some sort of volatile move in this counter, and especially when in this market scenario, many good stocks have corrected from high. Better to look at placement of those stocks. But yes, if you especially talk about the Z, I think 149 is a support, and it can bounce towards 161. Above 161, I see the fresh short covering trigger. So first play till 161. If surpasses an all, then look for the next 10-15% short covering trigger.
All right, that's the view on Z. But, Chandan, what would you be recommending in a market like that, in terms of, stock picks for the next couple of weeks, given the fact that although we have managed to recover half of the lost ground, would you say that volatility will persist? In that sense, what should one really look at buying at the current juncture?
Yeah, so definitely the volatility will continue because we have seen a even increase in the ATR, that means average true range. The index has moved by 2,000 points, recovered by 1,500 points. So that ATR will continue to give the volatile swings to the broader market. But the good part is your India VIX has corrected from highs. So somehow the stability will be back in next couple of days. So I can go with SBI, one of the strongest counter. However, it witnessed decline, but again, better price structure is clearly visible after the recent profit booking. So with support of 795, we can see an up move towards 870 kind of level. Positive on the capital goods name. We have seen decent run up before election result and all. So support based buying good here after a small decline. Here we prefer to go with Cummins with support of 3350. It can head towards 3800 level. So these are the couple of names we need to keep in mind, and I believe some sort of alpha can be generated here with lower beta in the market.
All right, those are the recommendations coming in from Chandan. With that, Chandan, we've come to the end of our discussion today. I look forward to having a longer conversation with you. Of course, it was cut short because of some glitches, which kind of happens in a digital setup. But thanks a lot for taking out time and joining in this morning and sharing your thoughts with us.
Thank you. Have a great day.
Thank you. Well, moving on, the RBI's policy meet is underway. Of course, the decision is due tomorrow. What should one be expecting this time around, given the fact that this would be the first one after the election outcome, which of course wasn't on expected lines. So how will the RBI adjust to the changing political landscape? Does it need to rework its strategies going forward or policies going forward? Let's bring on board Latha Venkatesh of CNBC TV 18 to put into perspective what we should be expecting this time around. Latha ma'am, thanks a lot for taking out time and joining in this morning. Tell us, a lot has changed. Of course, a lot has changed since the last policy meet and this policy meet, this being the first one after the elections. Do you think it will be pretty much the same thing, and perhaps later policies, all the changes in the political scenario will be considered by RBI? How does one approach?
No, you put a finger on it. The situation has changed, and the RBI will have to keep an eye on the political setup. But first, let me just give you the bond market backdrop.
Right.
The bond market was thrilled by several things. First, the deficit for previous year came in lower than expected. So the expectation was this year also deficit will be lower than the forecast 5.1%, maybe it will be 4.9. Maybe the government will announce a lower, cancelling some of its bond auctions later in the year because, tax buoyancy is there and they have kept expenditure on a tight leash. So that led to a rally. Then you had the S&P putting us on positive, that led to a rally, and then the expectation that once the BJP comes, they will continue with the fiscal discipline and the borrowing program will be less. So, and of course there's the bond inclusion. So on the supply side, supply of bonds will fall. Demand side, the index inclusion will mean more demand for bonds. So bond markets were absolutely in raptures, and we saw the yield fall below 7% and go all the way down, the 10-year bond, to 6.94 after the exit poll. After the actual result came in, just as the stock market lost all its gains, the yield went back to 7.04, which means 10 basis point rise in yield, which is very rare in the bond market, expecting that now there will be no fiscal deficit cut. In fact, there could be a higher fiscal deficit as rural markets are propped up, etc. Now, the equity markets have gained back a lot on the hope that the Modi government will come back, although it will be on a tight leash by the other NDA allies. The bond market has not recovered so much. It has recovered barely 2 basis points. From 7.04 we have come to 7.02. But where we were at 6.94, so bond markets are still in a tizzy. Now the question is, what can the Reserve Bank do? The Reserve Bank, as you correctly said, will have to take cognizance of the same thing that the bond market is taking cognizance, the changed political setup. If there is fiscal looseness, if the fiscal deficit is slightly higher than what was announced in the February budget, then RBI can't loosen. You don't become fiscally loose and monetarily loose at the same time. You have to balance. So my sense is that the Reserve Bank, primarily because there is uncertainty on the political front, will be absolutely flat, won't make any changes in its stance, rates, or even in its tone. No hawkishness, no dovishness. Absolutely flat is the expectation.
Okay, so that has answered my basic question as to what we can expect in terms of rates. Likely to stay unchanged at 6.5% stance also, stays. But in terms of inflation and growth forecast, they will have to make adjustments, right? Because higher, rural spending would mean higher inflation. Growth came in extremely strong. Of course, blowout figures for FY24, 8.2%. Is there a case for RBI to reset that or relook at that?
That's a damn good question, because one of the other poll questions we ask is whether RBI will up the growth forecast. Up until the exit poll, we all thought that RBI will up because you got a very good FY24 GDP number. RBI is already standing very high at 7. But this was the case even last year. RBI's growth forecast was higher than the analysts, and the analysts caught up with RBI. Now the expectation was, 7%, will they, have the courage to raise it? Now it looks like that question is out of the reckoning. You will wait to see, whether everything is panning out, because, capex always comes better if there is political certainty. Now the capex cycle, which was always government led, will perhaps take longer for the private sector to pick up the baton. Because of the uncertainty. So the question of asking RBI, will you up the forecast, I think we can't even ask that question. In the press conference we will hesitate. So the poll that we did also showed that expectations of higher GDP forecast by the RBI is, there were hardly anybody saying yes. On inflation also, the RBI may not move that quickly. The problem with inflation has been potato crop has been lower. The Agriculture Ministry just released some data showing that many vegetable crops are still under the weather, lower than expected. So there is a likelihood of slightly higher inflation on vegetables. But there is also a forecast of normal and even better than normal monsoon because of La Nina and not El Nino. So I think given these weather forecasts, the Reserve Bank will have the confidence to keep with its forecast of 4.5 for the current year. I think even on the estimate front, RBI won't do anything but will wait for more data. The big fear on inflation is whether the Reserve government will up the MSP. The minimum support prices come even before the budget. It could get announced in June itself. Given the rural distress, will they announce higher MSP is a possibility. We'll have to wait and see, but the policy is tomorrow. They can't wait. Chances are they won't move on anything and take a call only in August.
But then the next policy
becomes more alive.
Important.
August policy becomes alive, and also, the global forecast, just quickly, no one is expecting the Fed to move on June 12th.
That's true.
Or for that matter in the July policy as
But
well.
ECB is expected to cut.
ECB is expected to cut and Canada has already cut.
Yeah.
So that way there is softening. Now the non-farm payroll numbers come on Friday. The Reserve Bank won't have all that. In any case, I think the Reserve Bank will be moved by dollar rates. And dollar rates, CME Fed Watch tool is giving a 50% chance of a cut in September.
Okay.
Now, the other 50% is saying that they won't cut because usually the Fed doesn't move ahead of an election because it is seen as favoring the incumbent.
Right.
So, there is a 50% who believe that even then they won't move. If the Fed doesn't cut, it is very difficult for the Reserve Bank to go ahead and cut because you'd always worried about any attack on the currency. Until now, we thought we don't have to worry. Bond index inclusion and return of a stable government will mean
And
equity and bond flows. But now equity and bond flows is not a given. So I don't think the Reserve Bank will take any call on cuts unless it sees the Fed moving in the direction.
All right, so that's the view. It's going to be,
absolutely status quo.
Flat status quo, and stick to the script kind of policy. Of course, we will be covering policy in details tomorrow, and of course, we will look forward to your participation as well in our discussion. But thanks a lot for taking out time and joining in and putting into perspective how things will change here on for the RBI as well. Thank you. But with that, we are completely timed out on this edition of Opening Bell. Just want to say that we couldn't really take up viewer queries today, but keep them coming in on our live feed on YouTube. Tomorrow morning, we'll try and take as many queries as possible. With that, of course, markets trading in the green, so looking okay there. But let's see how things progress, as the day progresses. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and have a great day.